welcome to the Q4FY20 results call of Hero Motocorp, hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star 10 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Raghunandan NL from Emkay Global. Thank you, and over to you, sir.
Thank you, Aisha. Good morning, everyone. I would like to welcome management of Hero Motocorp and thank them for giving us this opportunity. We have with us today Mr. Niranjan Gupta, Chief Financial Officer, Mr. Naveen Chauhan, Head, Sales and After Sales, and Mr. Umang Khurana, Head, Investor Relations. I would now hand over the call to Umang and request him to take it forward. Over to you, Umang.
Thank you, Raghu. Thank you for hosting us. Hello, everyone, and welcome to the Q4 and full year FY20 investor call for Hero Motocorp. Trust everyone is feeling and keeping safe and healthy. Here is wishing by the time we do our call next quarter, the pandemic and its impacts are behind us. Raghu has already spoken about the participants on the call. We will begin with opening comments from our CFO, Niranjan, and then open the house for Q&A. Niranjan, over to you.
Thanks, Umang. Welcome everyone to this call. These are unprecedented times, and I'll talk a bit about that. Before that, let's just have a recap of the quarter results that we declared yesterday evening. Our revenues, as you would have seen, 6,238 crores. However, if we adjust for the lockdown loss of sales impact, where we lost 2.3 lakhs of sales in the last 9 days, then the adjusted revenue would stand at 7,400 crores. That's important to understand the underlying revenue. Similarly, EBITDA margin, which you would have seen at 10.6%, if you exclude the one-off items that we have factored in quarter 4, the underlying EBITDA margin would actually be 13.5%. These one-off items comprise the support that we gave to the dealers towards the end for liquidation of BS4, equally a provision that was created on the Neemrana fiscal benefit, and some provision on account of the raw material and finished goods obsolescence on BS4 and BS6 transition. If you apply the 13.5% to the adjusted revenue, actually our underlying EBITDA would have been 1,000 crores. We declared a dividend of rupees 25 per share, including interim. This is 90 rupees per share, higher than last year, and our declaration of dividend, maintaining a very progressive policy of payout, is evidence of our confidence in our liquidity position. Coming to the volumes, you would have seen the volumes. We gained market share in motorcycle. We have retained very strong leadership in entry and deluxe. We made foray into premium, which will further be boosted by launch of Xtreme 160R, which will start getting dispatched in a couple of weeks' time. Scooters were impacted in the quarter by a conscious call to stop production before December end as we migrated from BS4 to BS6. Our 125cc scooters have been doing pretty well. Overall, for the year again, what will be important for you to note is this year we brought down the dealer inventory by almost 5.5 lakh. The dealer network is sitting at one of the lowest inventory, which is also very important for the dealer financial health, as much less working capital is locked into the system, which helps in revival and sprinting ahead. Overall, if you look at it therefore from the result perspective, while the dispatches may indicate a decline, on an underlying retail basis, actually we grew, and which was a good sign until the lockdown struck. That's about the results. Now let's talk a bit about the current situation, about the pandemic, about the way forward, and how do we see things panning out. We are all aware that India enforced one of the strictest lockdowns in the world, and virtually 2 months of business got washed out. It is of course important as Hero as well. Safety and well-being of all our stakeholders is a key priority. And in line with that, we actually shut our factories ahead of the national lockdown announcement. Equally, as we all have heard, lives and livelihood, both are important. So when we talk about well-being, the well-being is not just about physical health, it's about economic and financial health as well, because the two are really symbiotic at some point of inflection curve. So this year is going to be about balancing all aspects of life and business. And you will see more and more in our decisions, in our numbers, and in our communication moving forward. These seem to be seemingly conflicting objectives, but business and life is about finding an optimum ground as solution, and the optima point may keep moving in different ways as we navigate the year. As far as demand is concerned, in FY21, very difficult to give a forecast about the demand. However, one can cue with what are the positives factors and what are the tailwinds. Tailwind, of course, is about lesser income in the hands of customers. Customers will have to make a priority, a choice, and we as business will have to play a role in ensuring that they also prioritize money towards buying goods like two-wheelers, which are essential as mass mobility and also income enablers. Equally, there are going to be factors like pent-up demand, India's two-wheeler story, because two-wheeler is not a luxury in India. It is about mass mobility, and also as social distancing norms are observed, it could give rise to personal mobility. So therefore, there's going to be a mix of factors, both positives and downsides, and we'll have to navigate these times to be prepared to navigate through the downturns and prepared to capitalize on any opportunity that comes our way. As far as the reopening and restart is concerned, as we all know, the lockdown has been relaxed and almost now most of the restrictions have been taken off. All our plants have opened up. They have become operational. The volumes are getting ramped up gradually. In terms of our vendors, all our vendors have opened up from the raw material side. Outlets, more than 90% of outlets have opened up. So the physicality of restart, one would say, is close to complete in terms of restarting the operation. The ramp up will be gradual in line with the customer demand. Initially, we are seeing a good pickup in the retail in the first few days. And this year is going to be about navigating the situation and monitoring it dynamically. Getting volumes back will be key priority, given that the top line is the one that is going to drive the bottom line. Among these headwinds, it's of course essential to keep an eye on cost and cash management as well. Liquidity and balance sheet strength is essential for survival of the fittest, and in these aspects, Hero is very well positioned in these uncertain times. So these are unprecedented times, and we are focused on unlocking, restarting, and reviving operations while ensuring, as we said, the health and well-being, both the physical health and the financial health of all heroes, all stakeholders across the ecosystem. With that, we open the floor for your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Also, we would request the participants to please limit your questions to 2 per participant. The first question is from the line of Ronak Sarda from Systematics. Please go ahead.
Hi, sir. Thanks for the opportunity. Hope all are safe. Sir, first question is on the demand side. When you say 90% of the dealers are open, if you can just help us understand how the footfalls are, and we're hearing a lot of online inquiries have increased, but how are the conversion rates there? And what do you think Hero will have to do to bring back customers and convert those into orders? That's the first question.
Ronak, thanks for the question. As we mentioned, the pickup in the retail has been good. There were a lot of pent-up inquiries as well. The conversion is also good. I'll just ask Naveen to add some qualitative flesh onto this as well.
Sure.
Naveen?
Yeah, thank you for your question. As Niranjan has mentioned, the pent-up is taking the demand. In marriage markets, there is an uptick, customers coming and asking for our products. Overall, we see this very, very positive Q. And in terms of inquiries, we are right up there, as Niranjan had mentioned. Week on week, these numbers are improving. And this positive, we are very, very positive on the trends that we see. Thank you.
Okay. Sure. So second question on Hero FinCorp, if you can just help us understand on the financing situation, how are things at Hero FinCorp? What's the kind of moratorium the customers have taken in the phase 1, which was announced by RBI? And how's the liquidity situation, and do you see any financing challenges?
Right. So as far as FinCorp is concerned, in fact, the financing percentage have been increasing. The FY20, they financed 46% versus 41% in FY19. They continue to be at 40% plus even in Q4, and that's what their plan going forward. They have sufficient liquidity as they had raised capital. Yes, some customers have taken moratorium. Equally, these are month-to-month moratoriums, and the customers are paying up and then subsequently taking the next month's moratorium, because a lot of customers do not want to create or accumulate a lot of payments towards post the moratorium expires. And equally, Hero FinCorp as always, and like most organizations, have been running incentives for people who are making payments early. I think they're running their operations pretty well. They are well managed on liquidity and have got a good runway.
Sure. But any numbers, sir, on the number of customers, if you can just help?
No, Ronak, we'll not be able to give out any numbers at this stage.
Sure, sir. Thank you, and all the best.
Thank you, Ronak.
Thank you. The next question is from the line of Nishit Jalan from Axis Capital. Please go ahead.
Hi, sir. Thank you for giving me the opportunity. Sir, my first question is, like you highlighted in your initial remarks, that you had to give certain discounts and compensation to dealers to get rid of PS4 inventory. So just wanted to understand if you can highlight the impact of that, because that will be a purely one-off, and it will help us in forecasting numbers going ahead.
Right. So as I said, the one-off impact, and for everyone to understand the financial statements, is that the EBITDA margin would have been 13.5% instead of 10.6%. Out of that, one of the big ones is the one-off support that we provided to the dealers, and that is around 110 crores. And this was, as you know, we had announced 10 to 15,000 per vehicle towards the end of March. So that is one of those impacts there. Other than that, we also made a provision for Nimrana fiscal benefit to the extent of around 57 crores. And there is some raw material obsolescence and BS6 on the inventory level that we provided. So all that put together, the underlying EBITDA margin is 13.5%, excluding this one-off, which should help you in terms of looking at how the future may pan out.
Thank you so much, sir. Sir, you highlighted that retails have kind of picked up. Any granularity you are getting as to which regions or markets are picking up, or you are actually seeing any downtrading happening, say, for example, from 150 to 125 or 125 to 100? Any color on that would be very helpful. Thank you.
Yeah, sure. So by and large, pan-India, there is a positive response, except for the markets which are badly affected by COVID, primarily being Maharashtra and Gujarat. Rest everywhere, we see positive uptick. The second question was about down trading. Yes, we see that, and we are well positioned to capture that. With our new products, which are getting very, very positive response across, we are well positioned to capture that.
Okay. So just one last thing. You have taken a price increase, if we believe the media reports, in April and May. Just wanted to understand what was the reason for that, because you had already passed on the BS6 related costs in price increases that you had done in Feb and March.
What we had done was to improve dealer margins and for the BS6 in the month of May. And also, while we did the price positioning and passed on in BS6, the relative price positioning minor fine-tuning had to be done to adjust that. So there are two factors why we took the price increase at that point in time.
Okay, thank you so much.
Thank you. The next question is from the line of Kapil Singh from Nomura Securities. Please go ahead.
Yeah, hi sir. My first question is on production and retail sales trend. Some of the companies are mentioning that while retail sales are improving, production is turning out to be a constraint as well. So could you give some color as to will the production lag the retail sales in the near term, or you are well positioned to bring production up to say 60-70% levels if retail does get there?
Kapil, good question, and it's a good problem to have, right? All this while over the last 2-3 years, we have been chasing retail, and now if retails are chasing production, I think it's a good problem to have, especially coming on the back of low inventory that we opened up the year with. Having said that, we in Hero have got multiple plants. Andhra also opened up. We have Halol also. We have Neemrana, we have NCR. So I think this positions us much better as compared to an earlier concentrated plant which was more in NCR a few years back. And therefore we have flexibility, as you know, because manpower coming back, migrants coming back, all this sort of stuff does impact. So our multiplicity of plants, and especially the Halol and Andhra which has opened up, that provides us with a lot of flexibility. We see manpower for our plant is coming back, of course not to the full level now, but given that our general pay scale also for contractors, casuals or workers is quite remunerative compared to their alternative options. We do expect a lot of them to come back, which they have started already. So for a short period of time, there may be retails chasing production, but we are very confident of making that up.
Yes, sir.
And I'm sorry, just to add, all our vendors are open. So therefore, it's not that some of the vendors are still closed. As I said, capacity ramp up will be gradual. But the first thing, which was restarting, opening up all factories, all vendors, that has been achieved.
Okay. Secondly, you mentioned some, one-off related to Neemrana. Where is that taken and what is it related to? Could you help us understand?
So this was more about as we transition to the GST regime, then the fiscal policy stated that 5%, which is the raw material refund that we were getting earlier, that in the new GST that they started giving wasn't incorporated. So in principle, that is recoverable, and we are doing all advocacy and all angles moving forward. But given that for the last 2 years that money didn't come, and therefore just on a conservative basis, we decided to take a provision for that.
So this is taken in other expenses or sales?
Other operating income.
Other operating income. Okay. And then lastly, if you have any quantitative or qualitative info, if I look at the industry in basically 3 segments, mass market motorcycles, premium motorcycles, and scooters, then what is the rural and urban mix in these categories? And is there any divide in terms of rural or urban doing better?
I think it's too early to actually put a rural and urban mix to the numbers. Right now, we are just focused on ensuring that all physicality of operations are opened up and they get ramped up, ensuring social distancing, ensuring all safety measures, ensuring comfort of the customers, and ensuring a mix of digital and physical. So this is where our focus is. If you're asking about the economy in general, one can cue that probably given the agricultural activities like the crops increase, the sowing increase, probably the normal monsoon that are being forecasted, and also fiscal stimulus more directed towards rural and semi-urban, probably those economies are likely to do better than the urban economies. So we'll have to watch out the trend as we move forward.
Thank you so much.
Thank you. The next question is from the line of Gunjan Prithyani from JP Morgan. Please go ahead.
Yeah, hi sir. Thanks for taking my questions. I just had firstly, I have a follow-up on this demand pickup that you're talking about. It's good to hear that. Is the way you put that 90% of your retail stores are now open, will it be possible to share some sense on where these stores are in relation to the normative levels? Any sense of where we are in perspective of, let's say, where, pre-COVID or normative levels that typically these stores operate at? And on the inventory as well, if you can give more sense, really, where are we now in terms of either months of inventory or the absolute inventory? If any sense you can provide on that.
Gunjan, thanks for this. As you said, it's early days to pick up a trend on what percentage they have reached to pre-COVID levels, because we'll also have to see how sustainable these numbers are. And therefore, it won't be right or fair to comment on that. All we can say is that, as we said, 90% of retails have opened up. All the outlets which have opened up and which are operating for more than a couple of weeks are doing good pickup as far as retail is concerned. So I think we'll stay with that. And what was your second question?
Inventory. The inventory levels,
yeah. So the inventory, we did open up with 5.5 lakh of BS6 inventory in the market as on 1st of April.
Okay. And second question I have is on the financing side. Now, this has been a general concern that given where we are in terms of more rates increasing and general state of the economy, financing is bound to be tight. Is that something you're sensing at your dealerships? And around that, from Hero FinCorp perspective, I see that you've invested about 260 odd crores in Q4. Is this the other investors have also come along? Is the stake remains the same? And what kind of capital call do you anticipate can come from this subsidiary, or investment can come from this subsidiary going into F20? If you can talk about the financing side.
Gunjan, so since Umang has limited questions to 2, you blended 3 questions into your question number 2. I'll attempt to answer those. One is your financing. On the contrary, actually, people are coming forward. The financial institutions are coming forward to finance the two-wheeler. Simply because if you look at the corporate financing and SME or medium enterprise or business financing, that is where the risk premiums and risks have gone up. As far as the two-wheeler financing is concerned, because the tenure is low, typically 24 months. So people with liquidity, obviously institutions have liquidity, but they're looking for relatively safer aspect and lower duration lending. So in that aspect, I would say two-wheeler financing is well placed, and we are seeing not only from FinCorp but interest from other institutions as well. As far as the raise of capital from FinCorp is concerned, other investors also subscribe proportionately, so our stakes broadly remain the same.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Priya Ranjal from Antique Stock Broking. Please go ahead.
Yeah, thanks for taking my question. One is on the, if you can categorize in various states or various geography, the demand, in terms of demand, where do you see the bucket, in terms of buckets, which are the areas where, particularly regions, etc., is actually coming back faster than overall India?
Again, I would urge that these are very early days. Lockdown has opened just 4 weeks back, also that in gradual fashion into red, green and amber zones. And as outlets have started opening, social distancing, safety measures, all SOPs have been rolled out, and now customers have started coming. And as we said, the retail pickup is better than what we expected. these are early days. So I think to then cut it by rural, urban, or west, south, or geography-wise, not enough data to comment on that. Naveen, you want to add anything?
So, as you said, Niranjan, as we look at the time of opening, all dealerships which are open for more than 2 or 3 weeks, they see positive, quite positive. And as I said, markets which are affected by COVID, there is a lag there.
Okay. And in terms of, just on the margin front and the commodity costs going forward, how do you see, Niranjan? Do you expect some benefit in coming? Although the rate will not reflect because of lower volume, but in terms of pure commodity benefit and components, etc., do you see some kind of benefit going forward?
Yes, as far as commodity is concerned, you can see if the global economic growth is into slowdown phase, then commodities are likely to remain soft. So whether it's aluminium, whether it's crude oil, so some of those benefits should flow in. Having said that, we also have currency depreciation. We also have precious metal, which are the two counter forces on the cost. So as I said, again, balancing will be key, even in this aspect, moving forward in this year. But as a basket, if you see, should be a positive tailwind.
Okay, that's all from me. Thank you.
Thank you. The next question is from the line of Ashutosh Tiwari from Equirus Capital. Please go ahead.
Yeah, hello, sir. So how are you seeing trend in terms of servicing at dealer level compared to pre-COVID? Some comment on that.
Servicing response has been good. We are seeing that customers are queuing up because the vehicles were held up for quite some time, though we connected with our customers in terms of giving them DIY, do-it-yourself kind of advices. But we see a positive response on the service front as well.
But compared to pre-COVID, at what level it would be roughly?
So we are almost there in the service.
Okay. And secondly, over last 3-4 years, we have seen HF Deluxe proportion in overall sales going up. So are we again seeing a trend that because of BS6 transition, it will further go up in our mix? And also in HF Deluxe, I think Kickstart was doing more better. So is there a trend post opening up that Kickstart variant sales are going up more than Self?
So if you look at it again, right now, for a trend of a month or 4 weeks, difficult to call. But as far as our plans are concerned, we are launching Xtreme 160, which is right in the belly of the premium market. Dispatches will commence in a couple of weeks' time itself. So we do see actually our share in the premium going up, on the contrary, rather than share of the HF Deluxe going up.
And just to add to what Niranjan said, Xpulse, which we launched last year, gave us entry into new markets. For example, down south is doing pretty well.
Thank you. Ashutosh, we would request you to please come back in the queue as we have several participants waiting for their turn. The next question is from the line of Raghunandan NL from Emkay Global. Please go ahead.
Thank you, sir, for the opportunity. So continuing the thoughts on Xtreme 160cc motorcycle, you indicated launch in next couple of weeks. What are your expectations for the model in terms of market positioning and potential volume targets?
It's right in the belly of the market. So the market of premium between 150 to 200 cc is the biggest part of the market. Naveen, you want to comment a bit more on our Xtreme 160?
So we showcased this in our Hero World, and the response has been very, very positive. Our dealers are very, very inquisitive and asking for it. 2 weeks we are going to start the dispatches. We are looking at higher single-digit market share to start with on this, and we will see as we move forward.
Thanks, sir.
There's a lot of industry first, in fact, and it's a very, very exciting product.
So all the best for the product. My second question was the press release highlighted on the cost reduction efforts. If you can talk a bit on the LEAP program, expectations forward, and the focus of management both on reduction of cost and reduction on capex, that will be helpful.
Yeah. So as we said, obviously the first priority is to get the volumes back. And I think some of you repeatedly asked this question. And generally, if we were to give a number, as we said, more than 90% of outlets opened, all our vendors opened, all our plants opened, and many of our dealers are actually reaching more than 70-80% of the pre-COVID retails as of now. We will have to watch the trend very closely and then move forward. Why prioritizing this and focusing on the volume growth, moving into premium, the market share? Cost and cash obviously is alongside a key part. And again, as I said, balancing is a key aspect. We have doubled our LEAP savings program target. We've been delivering, last year we delivered around 50 basis points. We are targeting to deliver 100 basis points this year. There are programs going on, which we are calling it LEAP 2 now. There is also a program launched to improve productivity of spend on our overheads, where again we are targeting substantial savings on account of overheads this year. And finally, on the capex, earlier our projection was around 1,000 crores. We have again rationalized and deferred parts of it to contain it to close to around 600 crores capex for the year. So all on cost, on the underlying cost, on the overheads, and on the capex, on all three streams, the teams are working on it. Plus, of course, as far as R&D is concerned, this is where we have not cut our investments. The product development is ongoing, and all the programs that are there in the R&D, they are not getting starved of the funds. So while cutting costs, while optimizing, while improving productivity of spend, we are very conscious of ensuring that the medium and long-term business priorities are not harmed.
Got it, sir. Any specific areas where the capex reduction of 400 crores pertains to?
It's generally across everything, as I said, other than the R&D. Parts of it are the capacity expansions that were planned, or some renovations that were planned have been deferred. But R&D has been prioritized in terms of the investments.
Thank you, sir. I'll come back in the queue for more questions.
Sure.
Thank you. The next question is from the line of Karthik Chellappa from Buena Vista Fund Management. Please go ahead.
Yeah, thank you very much for the opportunity, sir. My first question is basically on our scooter market share. It has been under pressure at least for the last couple of years. So can you talk about specific initiatives you have in that segment to gain back the lost market share?
So as far as scooter is concerned, I'll talk a bit and then hand it over to Naveen. This year was also about inventory adjustment in scooter. Our 125cc did fare very well. And moving forward, we do see our exciting product in the shape of the 110cc new Pleasure BS6 model, or our 125cc Destiny and Maestro Edge picking up shares in FY21. Let me hand it over to Naveen to add on to that.
So you've given the flavor, Niranjan. Pleasure Plus is being received very, very positively. And while earlier version was limited to some markets, on the new Pleasure Plus, we are getting positive cues from across. So that's one strong positive for us. 125cc, which has grown close to 2.5 times in the last 4 years, our presence in that segment is positive news for us. Destiny and 125 Maestro Edge are well positioned. Our strong market, we're getting very, very positive numbers and market share. And Duet, we will, the Destiny offers the right value to the customer, and hence it will do good there as well. So let's wait.
Got it. Thank you very much. So my second question is on the share of financing per se. You had mentioned in one of the earlier comments that it has reached 46% in FY20. Do you expect the share to rise? And as dealer outlets open, have you noticed any change in the number of financing partners at the outlet level?
So the finance share has gone up, that's for sure. And in the recent times, post-COVID, whatever outlets that we have seen, there is demand which is picking up for financing. As far as the finance partner is concerned, we are looking at finance as a product, and our discussion with our financial partners is to continue to innovate on the financial product. So that's the direction in which we are working.
So rather than addition of partners, with the existing partners, we are trying to come up with kind of schemes which can be more adding value to the customers. That's how we should take it?
Absolutely.
Okay, got it. Thank you very much. I'll come back in the queue for more questions and wish you all the best.
Thank you.
Thank you. The next question is from the line of Amin Tarani from CLSA. Please go ahead.
Yes. Hi. Thanks for the opportunity. My first question was just a clarification on the financing thing. So 46% is the overall number for you. How much of this would be done by FinCorp?
So let me just clarify. The two-wheeler total financing in FY20 was 43%. So 43% of our sales went through financing. And out of that, if you see FinCorp share is 46%.
Understood. Thanks for that. My second question is that you have also started this new digital selling process, which is, I guess, every OEM is now thinking about it. So my question was that out of the overall sales processes, what percentage of the processes have you been able to move completely digital? And how do you think this will play out in a market like India, where it is not always possible to do everything digitally? So just your thoughts on that will be helpful.
So from the time the inquiry gets logged into the final delivery, the entire process has been digitized. In fact, we've done some pure contactless deliveries to the customer in the recent past. So the entire documentation is digital. There is no physical connect which is required in the process.
Even financing happens without the hard copy and all, or that is still.
The financing piece is getting integrated into our process. So that's the direction in which we're working with our finance partners.
Okay. That's helpful. I'll come back in the queue. Thank you.
Thank you. The next question is from the line of Sonal Gupta from UBS Securities. Please go ahead.
Hi, good afternoon, and thanks for taking my questions. Just a few housekeeping questions. So, sir, could you tell us what is the spare part revenues for Q4 and for the year?
Yeah, for the Q4, the spare part revenue was 751 crores. And for the year, it was 2,896 crores, which reflected 2% growth year-on-year.
Okay. And what was the other operating income for the quarter?
So I think that would be there in the financial statements, which you can pick up. But for the quarter, if you want to know, the other operating revenue was 137 crores.
This is after the impact of Neemrana, like you said?
Yes.
And sir, could you give us a sense of now post BS6, what sort of, cost comes from precious group metals? Any sense you can give us on that?
So, if you see, precious metals would be roughly, not a big number as such in terms of percentage of the revenue, probably close to 4-5%. Yeah. As overall basket. So it all depends on the movement, within the precious metals, because there are three types of precious metals within that, and therefore the price movement is important.
Right, but within that you'll be more linked with palladium, or is it other?
There are different proportions, so that we will not be able to give out to you. But whether it's rhodium, palladium, and platinum, all three are there.
Okay.
And as part of our Lead 2 programs, as we highlighted, we are doubling our savings program. One of the things is to look at flexibility in composition as well.
Okay, great. Thank you so much. I'll join back.
Thank you. The next question is from the line of Mihir Zaveri from Avendus Capital. Please go ahead.
Yeah, thank you for the opportunity. I just missed, sir, what is the inventory levels right now? Because you said inventory is pretty low, so can we get a ballpark number of what it is stands currently vis-a-vis what it was earlier?
So current inventory we won't be able to give. We started with a very low inventory, as you said. So the FY20 we closed inventory which is almost 5 lakhs lower, 5.5 lakhs lower than the FY19 ending. So in a sense, right now retails are chasing production, as one of you asked, and we are ramping up production pretty fast in that manner, as the retail have shown a very good pickup in the early days.
And sir, any idea on how? Obviously, it's too early. You said that week on week things are improving, but how does the quarter stand? Because April was pretty muted anyways. May would also be. So I think there will be some pickup in June. So do we think that the quarter is going to be pretty muted as a whole? Though there has been recovery, but how should we look at it?
We do not give out a quarter guidance. I think it's important to recognize that April was a full lockdown, and then May the lockdown started opening. And therefore, again, as I repeat, the focus has been to ensure, first of all, that all our operations open. To that extent, opening 90% of outlets, 100% of our facilities, and 100% of our vendors in just 4 weeks signals a very rapid ramp up towards normalcy. Plus, the pickup in the retail, as you said, has been better than expected. So it all augurs well, and we'll move forward with that and then monitor month on month basis.
Okay, sir. Thank you.
Thank you. The next question is from the line of Hitesh Goel from Kotak Securities. Please go ahead.
Yeah, thanks for taking my question, sir. So basically, what we're trying to get a sense on the numbers on retail side to project our numbers. What I get a sense from is that June would likely be around 3.5 like retails or something like that. Is that a right number to look at? How should we look at retail numbers in a couple of months to just give us a trajectory? How should we forecast? I know it's difficult, but just to get the correct trend.
I repeat, and I'm sorry to repeat again, we do not give any monthly guidance or forecast on the numbers. Again, what is important is, and I repeat, what is important is 90% of our outlets have opened. Within 2 weeks of opening, a lot of our outlets, majority of our outlets are reaching pretty close to pre-COVID levels. So that's the early sign as far as retails are concerned, which is a very good sign and positive aspect that we see. And right now...
Yeah, Nilanjan, I was referring to that only because if we look at pre-COVID, in January, February, you were doing around 5 lakh kind of numbers on a monthly basis. So if it is 70-80% of that number, then I think 3.5 lakh is kind of the run rate we are looking at. That is what the kind of uncertainty I would like.
I leave it to you and your team to do the fine tuning and the calculations. Let's rest it there.
Okay. And the second question is on the other expenses. Given that there is sharp fall on Q-on-Q basis, even on YY basis on the volumes, we have not seen much reduction on the other expenses. So can you just guide us if there is some one-offs or one-time provisions we've taken there as well? And how do you plan to reduce this cost?
So I think if you look at our other expenses trajectory, it's already reduced significantly. Look at Q4 of last year was 930 crores, and you see this quarter is 825 odd crores. And even on a year-on-year basis, it has reduced. And as I said, moving forward, we have launched programs on optimizing our overheads and improving productivity of spend, and you will see that coming through in the future quarters as we move forward.
Okay, great. All the best and hope everybody remains safe. Thank you.
Yes. Thank you.
Thank you. The next question is from the line of Ashwini Kumar from Nippon India Mutual Fund. Please go ahead.
Yeah, good afternoon, sir. I just wanted to know in terms of financing schemes, what are you doing to really make the things affordable till the consumer comes back into the normal shape in terms of his earnings or income? That's the question.
Yeah. So there are multiple things. Like for instance, by geographies, by markets, we see where a low down payment is important. So to those customers, you provide that option. For some of the customers, a flexi cash or a flexi EMI, that is important. For some customers, it is the ROI or the rate of interest, that is important. So we are actually, as Naveen also said, working with all our financing partners to ensure that the products are customized to the local geographies and to the customer group, so that the customer is offered with multiple options and therefore he can then buy the two-wheeler that he requires.
Sure. And sir, do you fear that replacement demand is a significant part of the total demand? So in a situation like this, people would essentially, those who need it might come and buy certainly at some point in time. They will do the needful. But people who want to replace, they might actually postpone the vehicle purchase for some time. Is that how do you address this situation?
See, there are multiple things that will happen. So on one side, you have people who are, let's say, thinking of buying a little later, may buy earlier because of social distancing and moving from shared transportation to actually personal transportation. In fact, we see a lot of institutions and a lot of companies for their own sales forces are allowing them or providing them facilities to buy two-wheelers instead of opting for a shared transportation or a cab or a taxi or Ola or Uber. So I think there are those trends which can be positive, which can bring forward the demand. Equally, there would be people who may defer it for a few weeks or quarters. And then other side positive is a lot of pent-up as well. Remember, for the last 2 months, virtually there was no business. And these are all planned buying where people allocate money and then keep it aside. So these are multiple combinations and forces that will act. The rural and semi-urban economy is showing a good positive pickup, both in terms of agricultural crop and monsoon and the stimulus that has gone in. That's another positive factor that can play out. So which is why it's very important to capitalize on the opportunities that present and give customers various multiple options which suit the requirement of the customers and then get the volumes back. And towards that, as we said, the initial 3-4 weeks has been pretty good on the retail, and we'll continue to navigate that and move forward. Naveen, you want to add anything?
I think you've summed it up well. There are forces which are working for the demand which is coming up. And yes, there may be few customers who might think of replacing to you later. But as of now, things are moving rightfully.
Is there any specific income group which gets more impacted who are buyers for your products, sir? Any specific income group you would like to highlight?
Logically, it will be the lowest income group, which will be impacted. Having said that, some of those issues can be sorted out by innovative financing products. Because remember that a two-wheeler purchase for a lower income group is not something which is buying for luxury. He's buying to step up his income. And one of the examples that is my favorite is a milkman selling by just walking versus on a cycle versus on a motorcycle. You can just imagine the multiplier effect that it has. So I think people will look for multiplying the income and income sources, and two-wheeler becomes a necessity in that aspect. So I think the key will be unlocking financing products, so that they can pay as you go kind of stuff. And towards that is what we are working towards with our financing partners.
So I think a large chunk of the commuter is into self-employed, and that's something which is going to be there. So I don't see too much impact as we move forward.
Sure. Thank you very much.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. A couple of questions. First is on the depreciation side, in this quarter, we have seen a sharp decline on QOQ basis. Is there any one-off in that, or previous quarters had BS4 related write-offs?
So not really, because at the end of the year we did take overall calculation of depreciation, including the accelerated depreciation that we did for BS4, BS6 transition. Overall, for the full year, if you see, the accelerated depreciation on account of just the BS4, BS6 would have amounted to close to around 30 crores per quarter. Yeah.
Okay, got it. So, and second question pertains to you indicated about inventory at dealership being very low. Are we using this opportunity to bring down our normal run rate of inventory which we have in the system in this kind of environment? I mean, usually we used to have anywhere between 35 to 45 days of inventory in the channel. Are we looking to take it a step down and use this opportunity to make it a lower inventory?
So there is space to increase as the retails surge forward. So as we move forward, there is space to increase that. And as we said, it's a good problem to have. The positive retails have surprised us and all in terms of the rapid ramp up that it has happened. Production is ramping up pretty fast in terms of meeting the requirements. And as retails move up, there will be space for inventory to move up as well.
Okay, understood. And lastly, if you can share some flavor of numbers at Hero FinCorp, book size and other details including profit.
Sorry, which numbers of Hero FinCorp?
Family book size in terms of profits and other details which can.
Yeah, so I'll probably give in short. The overall book size Q4 over Q4 has grown up by 20%. FinCorp continues to be profitable. They have declared profit for the quarter and for the year, and year-on-year profit also has grown, and they have sufficient liquidity as they called up equity capital in Q4 of this year.
Okay, got it. Thanks.
Thank you. The next question is from the line of Shyam Sundar Sriram from Sundaram Mutual Fund. Please go ahead.
Yeah, hi sir. Thanks much for the opportunity, sir. In terms of the raw material cost as a percentage of sales, we have seen a sharp increase on a sequential basis. While some of this can be understood because of the BS6 dispatches, from a per vehicle raw material cost also has increased more than the increase in realization. If we can help us understand that. And secondly, with the price increases we have taken, will the gross profit per vehicle basis be similar to what it was prior in the BS4 era? If you can comment on this.
So I'll give a broad answer to that. Primarily, the increase in material costs, as you rightly said, is on account of BS4, BS6 mix. Equally, there were some one-offs which I have highlighted already in terms of material costs. Going forward, as far as margin is concerned, we will not give a guidance for the margins. However, if you look at the factors, there is this BS6 where the absolute cost has been passed on into the pricing, that the numerator denominator impact, whatever it will be, will pan out. On the commodity side, that basket is expected to remain soft, so that should help. On our own initiatives, we've launched these 3 initiatives: Leap 2, which is doubling the target of Leap, CapEx cutting to 600 crores, and launch program on the overhead saving. So that should help us moving forward. Beyond all this, key will be to pick up volume, because you need a certain volume on the top line to be able to absorb the fixed overhead. And that's why our focus has been on volume, and it's been pretty successful so far in the last 4 weeks.
Understood, sir. I know I was just asking on the gross profit per vehicle, but you did mention that all the cost has been passed on, and that was helpful, sir. Sir, and from a balance sheet perspective, the receivable days has come off quite sharply, whether we compare YOY or from a September balance sheet perspective. What has changed there? Any change in the terms of trade per se, if you can highlight anything there, sir.
So as far as receivable is concerned, earlier they were on elevated levels, which is what we had explained. And thereafter, because our inventory was also on elevated levels. So as the inventories have come down, so as the inventory in the market has come down, so as receivables on our book also has come down.
Okay. So there's no change in terms of trade with the dealers or extra, nothing of that.
No change in terms of trade.
Okay. Understood, sir. Sir, one last question, if I may squeeze. From a BS4, BS6 mix during the quarter, if you can give some color on that based on the dispatches we have done, and any unregistered BS4 stock left there in the remaining?
For the quarter, roughly you could say half was BS6 and half was BS4. So that's a rough breakup of the quarter 4 dispatches. As we said, all the BS4 stocks with the dealers have been sold. There could be some which is not registered at the network, would be smaller quantity, but that's more a registration part and a smaller quantity. In terms of selling, all the BS4 stocks have been sold by the dealer.
Thank you. So we would request you to please come back in the queue as we have several participants waiting for their turn. The next question is from the line of Chirag Shah from Edelweiss Securities Limited. Please go ahead.
Yes, Chirag.
Chirag, the line is in talk mode. Please go ahead. We would request the current participant to please unmute yourself if muted from the handset. As there is no response from the current participant, I have muted the line. The next question is from the line of Nishant Raj from ICICI Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. So just first housekeeping question for FY20. Your thoughts on what is the rural versus urban mix and how did those segments grow in FY20?
Naveen?
So close to 50% of our business comes from rural, and it's maintained at that level right now.
And the growth trend between both of them for last year?
As far as rural urban is concerned, last year, as you know, the industry declined overall. But within that, one would say that rural would have fared slightly better than urban. I think at this stage, that is what is relevant. As we move forward this year, rural and semi-urban, as of current indicators, are likely to do much better than urban.
Just to add, I think if we look at historical data, rural has always been slightly higher in terms of growth rates.
Great. So my second question is on the distribution and channel side. Could you just update us in terms of where you closed in FY20 in terms of channel and touch points? And second, in terms of further expansion strategies, and considering that you are saying that the adoption of digitization has gone to such an extent that you are doing contactless delivery, how are you thinking about that expansion now in this new era?
So our focus has been more on getting more throughput out of our network. As we know, we have the biggest network amongst all the players, including our dealers and ARD network, etc. And therefore, focus is not so much on the expansion. The focus has been on the throughput. And obviously now the throughput should see further improvement as you go as a combination of digital and physical.
Yeah, so in terms of physical representation of our network, I think we are there pan-India. The focus, A, as you said, is more on throughput, and B, in terms of strengthening our dealerships. So that's the direction in which we are moving this way.
So can we assume that with digital being the additional lever, incremental network expansion physically basis would be lower than say in the previous years?
So this is a constant phenomena wherein we look at, we review people, and there are replacements, and so it's not a major thing. The normal course of time that way we will move forward in that same direction.
Okay, thank you.
Thank you. I now hand the conference over to the management for closing comments.
So thank you very much for being on the call. Again, just to sum up, our restart of the operations have been very rapid. More than 90% of our dealers have opened. A lot of them, majority of them, have reached substantial percentage of the pre-COVID retail sales already. Our production is ramping up. All our factories are open. All our vendors have opened, and we are scaling up very rapidly. We'll continue to do dynamic management as we move forward. We are geared up fully to capitalize on any opportunity that presents. There are headwinds and tailwinds, rural and semi-urban likely to do better than urban. There are positive factors which we are geared to capitalize. And Hero as such, we have a strong balance sheet and liquidity position and a team, leadership team and management team to navigate through these times. We appreciate a lot on the interest shown on this call and the questions, and thanks for that. If there are any questions which are unanswered, we'll be happy to take it offline through Umang. And let's move forward with positivity and with optimism. Thank you, and thank you all.
Thank you very much.
Thank you. On behalf of Emkay Global, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Ladies and gentlemen, with this we conclude today's conference call. On behalf of MK Global, we thank you for joining us, and you may now disconnect your lines. Thank you. On behalf of MK Global, concludes this conference. Thank you for joining us, and you may now disconnect your lines.